So what's up guys, it's your boy Looney, and today I want to talk about something I wish I had watched years ago. If I had to start over from $0, knowing everything I know now, how would I rebuild to 100,000? Look, I have made plenty of mistakes. I have been in situations where I'm too spread out or I've gotten too greedy with options and just overall not being patient enough. So in this video, I'm going to break down exactly what I'd do differently if I had to restart from scratch. But before we get into this video, quick shout out to the Discord. It is free to join. And I also offer a premium membership for $8 a month, and it gives you access to one-on-one coaching, trade callouts. I have an option selling course. I do giveaways and more. You can check it out. All the links are in the description. So if I had to start over and kind of where I'd be at now, I would definitely be at 100,000. There's a lot of mistakes that I would have avoided knowing what I know now. And I kind of just talked about them in the intro. Basically, I'm too diversified and I was getting too greedy with options and just overall not being patient. So let's actually start off with the diversification issue. Now, when I started investing, I kind of owned too many names. I had small positions everywhere and none of them really mattered. I didn't really have core positions. And my thought process when I first started is that everything goes up. And that is sort of true, but you get what's called diminishing return. And after like 20 stocks or 20 different investments, you have stocks that kind of overlap or not even overlap, they hedge each other. So your growth is diminished. And looking back, I would definitely like to choose a lot less. And I've been able to actually work on that. So I've cut down a lot of positions, but for stocks, I would like to ideally have around 10 or less fewer stocks. And of that 10, half of them being core positions, and then the other half being stocks that are maybe shorter term or trading. But that would definitely be the strategy. Right now, I hold 13 different positions, and I have around 5 core positions. My 5 core, I would say, are Riot, Mara, SoFi, Hims, Hood, and then I also have some long-term plays like Amazon and Google. I do have some ETFs that I probably will sell, or if I need the cash, will sell. These are probably the first to go, just because if we do see a bear market, although everything will be down, I would say VOO and SPY will be down a lot less than my volatile names I own. So these are probably the 2 first to go, and then I'd probably invest those profits, or maybe there might not be profits. So I'll invest whatever it is into my other positions, whether it be the core positions, the long-term positions, or maybe into a trade, but probably not the trade. And then you can see I have some more fun plays. Well, I don't know if they're fun, but these are shorter term. I have Beyond Meat, definitely a risky trade. I have some covered calls and I've got them pretty cheap. So my overall return is still good. So I'm not really concerned of selling that right now. I have Open Door. This one is in the red, and I am dollar cost averaging down if it continues to drop, which it definitely can. And then I have Webull, which I just got assigned, and I'll probably sell a covered call. Now, that's for the stocks. For crypto, because I would definitely be involved in crypto still if I were to start over, but I would definitely choose a lot less. I kind of had the same mindset again, where I was like, okay, they all sort of work the same. Crypto, which they kind of do. If Bitcoin goes up, the other cryptos go up. If crypto or Bitcoin is down, the rest of the cryptos are down as well. Yes, you could talk about alt season. Some actually outperform during certain times, but overall, they kind of all follow the same trend. And if I were to start over, I would definitely choose a lot less. I'd probably go with like 5 or less crypto positions that I plan to hold through cycles. So Ethereum, Bitcoin, Doge, those are definitely my core positions. And then I would probably sprinkle in some altcoins or different coins, maybe even keep Link, Litecoin, and like AVAX and SUI. These other ones I don't really plan to hold. I'm pretty deep in the red. So I've been just dollar cost averaging and just averaging myself down. Something like Shiba, if this doubles and I get a 100% return, I will definitely not be shy to sell off these just to get rid of some. And then I want to reinvest those into like Bitcoin or my core positions, just so I could build those up. And yeah, something like Ethereum Classic, I already have Ethereum, so there's no need to have Ethereum Classic. And definitely looking back, this was not a great decision. I kind of was just playing around and just did everything. And I'm kind of learning from it. And this one's down 30%. Maybe I'll sell this off for a loss and just kind of free up some cash and have that kind of off my plate and not even think about it. But we'll see. We'll see what I decide to do with this. It's not a big position, so not like it's the end of the world, but it is worth noting. And yes, that's what my sweet spot is, having 10 or fewer stocks and 5 or fewer crypto positions, and then also trading on the side. And we'll talk about that in the next point. But when you're starting small, you should be focusing on building faster and not really focusing on diversification, because you could always diversify later once you have size. But to grow, you need conviction and not clutter. There's always going to be a new shiny ball. So diversification is not like something that should be your first concern, because there's always going to be a new stock. There's always going to be a new ticker. You can always diversify later. Now, the second point that I would do if I were to start over is not get greedy. And this is specific, or more specific, to selling options. I do buying options, not as much, but that would probably be another point, is to do more leap and leap calls. But that one's kind of a hard thing to predict. So that one's not really something I would know to do. But definitely getting greedy, because during this year, we saw a massive dip into April. And I sort of had a blind mindset once again, where I was like, okay, new administration's coming in. The market's going to absolutely rip. I'm just going to keep investing my cash and just selling options at deltas, at high deltas. And although the market did recover, looking back, I definitely kind of rushed these things in and FOMO'd in a little bit. And I got assigned a bunch of shares at prices that weren't ideal. They're not the worst, because you could see I did recover. I'm still up 25%, but definitely I could have had better setups if I were to start this over. And now I'm kind of learning another thing with the covered calls, the other side, because when the market actually V-shaped and made a fast recovery, my covered calls that I sold once I owned the shares were in the money, and I had to roll them and pay for them, and just overall a lot more management. And for example, we could look at something like Riot. Riot's a stock that is one of my biggest positions, and I sold cash secured puts earlier this year, when it probably wasn't ideal. Should have waited. But yeah, now I'm learning that the covered call side is also an issue too. You could see I'm in the money and having to roll these. And looking back, I would probably be a little less greedy and not have all my shares covered. I'd probably do like 10%, and also wait for those green days, those days that the stock absolutely rips. And then that's probably a better time to sell a covered call. So again, how would I do this differently? I would sell puts only on stocks I want to own at prices that I feel realistic of owning or feel comfortable owning. The other thing is to sell covered calls far enough out of the money to let my shares kind of appreciate with it. And overall, staying patient, not selling all covered calls or not covering all my shares, not aggressively selling puts, being more patient, dollar cost averaging with options, and just aiming for a 1% to 3% per month, and not just quick wins that could actually blow up the plan. Because the goal isn't to make money fast, it's to make it consistently. And we could see one that is going on now with Webull, because I did get assigned shares at $12, and you can see that I am being patient. And yeah, I'm dollar cost averaging. I have a $10 put that I sold to dollar cost average. And earlier, or the old me probably would have been more aggressive, probably would have been selling 2 puts at the $12 and just really rushing in. But now I'm more patient. I'm selling puts at 12, 11, 10, dollar cost averaging down. So number 3 is to just build structure before scaling up. Because if I had to rebuild it, I would spend more time on structure, and I would track more trades. I would journal what I did right and wrong, and just overall review my positions weekly, because that process compounds faster than the portfolio. Because once you learn to manage your own behavior, the market starts feeling random, and you sort of get rid of those emotional decisions. Now, this is something that I have been pretty good at. I don't really get too emotional. I don't let fear take over my decisions, but there are times where I rush in and I get sort of impatient and just overall make entries that aren't the most ideal. Number 4 is patience. Patience is a position because early on, I always felt like I always had to be in something. But sometimes waiting is the best trade. And now I've really valued just holding cash on the sidelines. Although there might be alternatives where you could hold your cash earning better interest, I feel more comfortable just holding it in a high yielding interest, waiting for those opportunities to sell puts, to buy leaps, and just overall make trades. Because I really do feel like waiting and just overall valuing your cash is a ideal setup for long-term growth. And yes, I do feel like you should always be invested, and that is what I am doing. But there are times where you should be less invested and sometimes where you should be more invested. And that's what I do. I look at the VIX and I deploy more cash when there is fear. And because the market always gives second chances. There's always going to be a dip. There's always going to be a pullback. You can't time these perfect, but you need to be prepared if there is one. Because if you're liquid and patient enough, you can take advantage of these. So if I had to start again from $0, I would stay more focused. 10 or fewer stocks, 5 or fewer crypto. I would also be smarter, not just greedy with options and doing high deltas. I would also build structure and really hammer in habits before just chasing returns. And lastly is just remember that patience is power. Because it's not about timing the perfect trade, it's about being ready when the opportunity shows up. If this helped, drop a like, comment, and let me know what you would do differently if you had to start from 0. And as always, see you in the next one. Peace.